So here are some notes on the AI memory trade, Micron versus the DRAM ETF. So it's the same broad theme, but there's different risk in both. Micron is the US listed single name stock, and DRAM is the global memory stock index or basket. So this is not a recommendation, this video, and it's just a thesis so clear that it can be proven wrong, which is the way to do it. So the simple version is that AI needs GPUs, but also has to move and store data. So that is where HBM, DRAM, NAND, and SSDs, they matter. So Micron describes HBM as memory designed for next generation AI systems and high performance computing. So Roundhill, which is the issuer of the DRAM ETF, they frame memory and storage as the bottleneck of the AI revolution, and I'm sure you've heard that as it's getting a little bit overdone by now. So the first principles thesis is that current AI progress still leans heavily on just raw scale. So frontier AI progress still tends to require more compute, more data, and faster access to that data. So humans can learn a lot from a very small amount of data, so we're very efficient, but we don't have access to that much data in our minds. But machines, they approach intelligence by way of brute force processing mountains of data. So until learning efficiency improves materially on the software side or the algorithm side, then memory demand stays central to the AI infrastructure build-out. So Micron is the clean single name version of the trade. It's US listed, tied directly to memory. And the upside for this is like concentration in one stock. The downside is the risk that comes with a single company, like execution, guidance, pricing, capacity, customer concentration, and those earning releases, which tend to cause a lot of volatility. So DRAM is the broader theme expression, which is an ETF, and it targets global memory companies tied to HBM, DRAM, NAND, and storage. So this matters because many major memory leaders in the world are listed outside the US. They're primarily in Asia, and like South Korea is getting now famous because of their memory leaders. So the trade-off is that DRAM gives more global theme exposure and less concentration than Micron in the US. So this narrative in the market and trend is not hidden anymore. It's very obvious. DRAM launched on April 2nd, 2026. And the Financial Times reported that it reached $10 billion in assets in under 50 days, which is like, I'm pretty sure, a new record out of all ETF launches. So this is useful evidence that the theme has been discovered, but we don't know how much is already priced in, and usually when I learn something, it's already fully priced in. So it's very difficult to stay on the new trends that are forming but not yet very public. So let's look at Micron earnings, because one's happening tomorrow as I make this video. But there's some short-term setups, trading setups, that are different from the long-term investment thesis. So into earnings, like the month leading up into, implied volatility and momentum can build. And after earnings, both can fade. And by fade, I mean flat or down price action, as the event volatility of earnings kind of just leaves the options chain, and also just the speculation in general on the stock. So a tactical overlay trade on top of your portfolio could make sense if the structure is defined before the earnings are released. So, you have to think about your position size, hedging, max loss, and your complete invalidation on your idea. For me, in terms of the short-term stuff, a simple invalidation is if Micron holds well above the 20-day exponential moving average into like the weekly close. Then the post-earnings fade thesis is probably wrong, because if it drops below that, there might be more of a fade and more of a drop. So it's just kind of like a basic concept of momentum. The price keeps going up until it, starts to dip below the average, and then it can cascade lower potentially. But that's just a simple invalidation rule. It is nothing about predicting the future. So the bigger investment theme, the big picture, that could be invalidated if supply catches up faster than expected. The Mag 10, the hyperscalers spending all of their money on AI build out, that could slow down. The pricing of memory could reduce, and that could be enough, and maybe the profit margins get compressed. Or learning efficiency in terms of large language models and AI models, they can improve enough that new progress doesn't need as much data or compute. So these are the key falsifiers of the investment thesis. And the most important one to me is learning efficiency, because it attacks the first principles reason of why memory demand is the current acute bottleneck, is because it's just so inefficient that the only way to progress is get more data happening through these models. Okay, so the sources used for factual claims are Micron's HBM product page, Roundhill's DRAM ETF page, the Financial Times report on DRAM, and Market Watch of the DRAM launch. So I may hold or trade positions mentioned in these videos, and this is my own thinking process, not investment advice. Bye.